So let's talk about the collapse last week of Silicon Valley Bank and Signature Bank in New York and how it relates to real estate. So how does a bank make money? Banks make money by taking your deposits and then using it to loan out to other people and charge them an interest. That interest rate comes back, and that is their profit in the bank. They also use the money sometimes to invest in things. Now, Silicon Valley Bank out here in Silicon Valley, California, use their money to invest in risky startups. And they also use their money to invest in hedge funds that invest in risky startups. Can you see a problem here? So you have a bank that's heavily leveraged in startups and heavily leveraged in hedge funds that invest in startups. And what happens in the last 10 months or so? The startups, the technology companies have all taken a dip. They're laying people off. They're losing revenues. So naturally, their values have gone down, and the investments that SVB has made in those companies has also gone down. Now, while that's happening over on the West Coast, on the East Coast, Signature Bank in New York is also a bank like Silicon Valley Bank, but they invest huge amounts of money in crypto. So they're heavily leveraged in crypto. What happened in the last year as well? The crypto market's taken a dive. And the crypto market's taken a dive in part because of these two morons. Now, here's where the real estate part comes in. These banks, the normal banks that we all get our money from for loans for houses and loans for cars, they don't invest in those type of risky things. So everyone's running around screaming, going, oh my God, the banks are collapsing, the housing market's going to crash. It's not, because these two banks really didn't operate in those sort of areas. They dealt with risky hedge funds that dealt in startups. They dealt in crypto. These banks here that we deal with every day do not deal in those things. So their market is very strong. Now, when the crash happened in 2008, it was because the economy was terrible because everybody lost their jobs. People had adjustable rate mortgages and they couldn't afford their houses and they were underwater. That's not happening right now. And these banks here you're looking at are very strong and solid, and they're making loans and they're making the housing market strong. They don't deal in hedge funds that invest in crypto. They don't deal in hedge funds that invest in startups. They don't deal in startups themselves. They don't invest in crypto on a large scale because they know they don't want to lose. So the general point is, the sky's not falling, housing market's not crashing because of these two banks that had massive problems with their investments. Real estate market is strong, and it will be for quite a while. So don't worry about what you read in the media about these two banks causing housing crash. It's not going to happen.